Hello traders, Gary Wagner here. Just about 10:15 in Honolulu, 4:15 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is June 30th, 2017, and this is the Daily Report for Gold and Silver, our weekend review, and in this case, our first half of the year review. And what a first half of a year we've seen. Of course, tremendous pressure in the precious metals markets this week. Actually, this month, gold pricing has been under pressure. Today, gold will close off on the day, lower on the month, and showing a respectable 8% gain for the first half of 2017, although there's a large caveat with that we'll discuss as we pull up our first chart. Gold currently is trading off about $4.40, trading at $1241.40. It is traded to a low today of $1239. That is important in terms of our stops. The high on the day has been $1248.20. And as I said, current print is roughly $1241.5. Net change on the day, a loss of about 0.4%. Silver also tracking lower on the day. And as we can see, current silver pricing is at $16.62, puts it off about 3.5 cents on the day. Net drawdown about 0.2%. Traders, as we look at performance for gold for the first half of 2017, it is respectable. It is respectable in that we have seen roughly a 8% gain over this first half year. However, that can be a little deceiving, or more appropriately, that has a major caveat. And the major caveat is the first quarter of 2017 is really where we saw the majority of gains in the market, achieving almost a 10% gain during the first quarter. The second quarter itself really was weak enough to give back part of those gains, but still closing, even though lower on the week and lower on the month, a respectable gain of about 8%. However, there has been some fundamental changes in Fed policies that have absolutely put some downside pressure in the precious metals markets, specifically gold, and gold now giving up really a good portion of equity this week. And in regards to the week, as I said, we did get the market posting some losses this week. We do have an active trade on. This is a carryover from last week in which we entered the market roughly $10 above current pricing, with our stops below this price point and in fact below the 200-day moving averages. Members simply go on the members page for the exact placement of our current stop. The one thing that we can say is, even with this market selling off this week, and in fact this month, we can say that over this last week, the market is traded in a defined range. And that defined range has been defined on the upside resistance area, really coming into alignment with the 50-day moving average. And then our support line has really been following our 200-day moving average. And that is to say that we have this market caught in between those two moving averages. And just as we were looking at the dollar before it broke to the downside, we absolutely see a compression of range in the market. And it does appear as though it is coming to an apex. And so traders, the apex that I'm speaking about, and there's a couple of them, we can do it with the weekly chart long term. We can also go short term, but I've compressed this chart and we're simply extending the series of highs that we have achieved here and following that through for our resistance line. Our support line really comes back to the lows achieved back in the end of 2016, 2017, and carrying them over across these sets of lows here. And we can absolutely see that the range has been compressing, and over the next couple of months, we could see a consolidation in this market leading to a major breakout, either to the upside or to the downside, as the market reaches the apex. As for our current trade, maintain your current long position as well as your current stop. In other markets that we follow, a dollar index, after having a tremendous sell-off over the last 3 trading days, is attempting to stage a small recovery. I'm going to put it unchecked in the column of unchanged today, 95.40 current print in the dollar index. Industrial average is trading higher, gaining about 0.3%, and it looks like it will close roughly at 21,349. Standard & Poor's also tracking higher on the day, 24.23. And then lastly, the NASDAQ will go slightly lower on the day, closing at 61.40. So as far as dollar performance over the first half of the year, we can see that that has absolutely moved to lower ground throughout this year. When we look at the industrial and the other equity indexes, we can see that in terms of the industrial, we've had a pretty sustained rally moving from the beginning of this year up till present, with a little bit of congestion and downside action for the last 2 weeks. About an 8% gain, equal to gold. Standard & Poor's, very much the same. You've seen the market really accelerate at the beginning of the year, take a little sideways action between March and May, and then move to new record highs. But it has been the NASDAQ that has outperformed all of the other indexes, moving up about 14% year to date for the first half of 2017. Traders, there's absolutely no doubt this first half of the year, 2017, has been filled with a lot of uncertainty. The net result was an extremely solid first quarter performance for gold, in which we had a gain of approximately about 9.5%. Now that the second quarter has come to a conclusion, or the first half of the year, it was able to hold on to the majority of those gains, still eking out about an 8% gain over the first half of 2017. And although it had a pretty dismal performance during the second quarter of this year, when we compare the first half year performance of gold to the Dow and to the Standard & Poor's 500, we can see that all three are on par, really showing about an 8% gain overall for 2017. However, as we noted, the NASDAQ, that tech-heavy index, was the stellar performer for the first half of 2017 with about a 14% gain. My sense right now is that we've got a push-pull scenario in the precious metals marketing, with statements and policy changes by the Federal Reserve as well as the ECB having a negative impact on gold pricing, and the uncertainty factor, the underlying tone of the current administration, their ability or inability to actually initiate and complete campaign promises. That is one thing. And then again, there are some geopolitical hotspots such as North Korea and Syria that could certainly heat up in the second half. Therefore, I believe we could see this market really take off in the second half. However, we could also see it come under some pressure. The bottom line is that the future is not written, and it will be most interesting to see what occurs in the last half of this year. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you after the long extended July 4th weekend on Wednesday of next week. Have a great weekend. Bye-bye.